Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, is President Biden getting more aggressive with the confiscation of capital? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Well, there's a lot of activity going on in Washington right now that will affect your taxes, and IRS expert Dan Pilla is here to get us informed. Hey, Dan, always great to have you on the program.
It's always my pleasure to be here, Bob. How you doing?
I'm good. How are you doing?
I'm well. I'm staying busy. I'm getting ready for my defense conference here coming up in first week in November, so I'm, I always get into that intense preparation mode here for the next couple of months for that particular conference.
Now, I can't remember. Did you do it last year?
Yeah, we did. We did it last year, in Las Vegas live, and we also did it by live stream. So it was the first time we ever actually live streamed the conference. And Bob, we were the first live seminar that was held in the city of Las Vegas after the shutdowns started to be lifted. As you know, everything was shut down. About May of last year, probably sooner than that, early April of last year, probably, and the Las Vegas convention's completely shut down. But we were the first one that was allowed to function in there, and that was end of October of last year. So,
well, talk about how odd that was to get to arrive at Vegas and everything shut down.
Yeah, it was. Everything was still closed down. All the shows were closed down, and most of the buffets were shut down, and it just all of the things that you would normally see in that city were just shut down. And of course, there was only a small fraction of the people there that you would normally expect to see. And so it was really odd. No question about it. It was really it was surreal, Bob, is what it was to see
sure.
the emptiness of the buildings and the hotels and the lobbies and the restaurants and so on. It was quite surreal for sure.
Well, you've also been busy cranking out a new website. Looks great. What resources will a listener find at the new site?
Yeah, well, first of all, you're gonna find that we address all kinds of tax dispute problems, Bob. We've got information on the site that will address 29 of the most common problems that people have with the IRS. And if you go to the website, which is taxhelponline.com, the first item on the menu there, on the banner on the top, is taxpayer help. And one of those options on that menu is 29 common IRS problems. And so these are kind of frequently asked questions, if you would. 29 of the most common IRS problems. I got them broken down into about 6 different categories. All right, so we deal with return filing problems, penalties and interest, computer notices, audit problems, enforced tax collection, and so there's answers to these specific questions. And Bob, this is free material. You don't have to sign up.
Sure.
You don't have to be a member. You don't have to give us an email or any of that stuff. You just go there and you look for help. The other thing we've got on the bar menu is resources. What specific resources do we have available for people to get them even more help with their problem? And the first item on that list is my books. I've written a total of 15 different books. There's about 6 or 7 that are in print right now that deal with every kind of tax problem that you have. Audit problems, collection, tax court issues, interest and penalties, and all of that sort of thing. And so you've got access to that material. You can click on that and see what that's all about. And then the other thing we have on there is a synopsis of the most recent newsletter. My newsletter comes out 10 times a year, and we always have on the website a featured article from the newsletter. So you can click on the current Pilla Talks taxes or current PTT, and that gives you the what we call the featured article. And then if you're looking for representation, if you need somebody to represent you, we've got a link there for folks that are associated with my organization, Taxpayer Defense Institute, and you can get connected with somebody who can actually represent you, whether that's me or any of the rest of our members. That link gives you that information. So, Bob, this is a really highly inclusive website that gives you a mountain of information available to help you deal with your tax problems.
Well, what I think that people don't realize is that when you have an abundance of resources that you've always had at the website, there's a real challenge in getting that organized and presenting that to where a listener can easily go from one resource to the next and pick out what exactly they need. And one thing I really liked what you did with the 29 IRS problems. You also, with your packages of resources, identified which ones that they would that the reader would learn how to deal with from based on the resource or the package. So congratulations again on that. One of the things I like about the site when you go to it is that you say there is no such thing as a hopeless tax problem. And I think this, and we talk about this quite a bit when you come on the radio, is that people just have very little hope when facing an issue with the IRS. They just think they're doomed, but it's not true.
No, you're absolutely right, Bob. And in fact, I've been saying this for decades now. It's not even years anymore; it's decades. That I don't care what kind of problem you have with the IRS. I don't care how long you've had the problem. I don't care what you've done to try to fix the problem that hasn't worked. I don't care if somebody's told you or who's told you that you can't fix the problem. It just doesn't matter. There's always a way to deal with the issues here that folks are facing. And just to give you an example, one of the links on the bar menu there is called Blogs and Events. And if you click on that, it'll take you to our blogs. And we've got a laundry list there of articles and videos and things that we have produced over time to give you insight on what the heck is going on here. For example, one of the recent ones deals with the child tax credit, and also I've got some discussion there on whether unemployment benefits are taxable. There's a great deal of confusion about that. You and I have talked about that in the past,
right.
And there's articles and videos there that will help you deal with that issue. So I mean, this is a resource that's it's updated on a regular basis. It's ongoing, and so it will give you the help you need there to get through your issues for sure. And that's what people are looking for, Bob. Listen,
Sure.
We got a tax code now that consists of more than 4 million words. That was changed more than 5,900 times just since 2001 alone, and that doesn't count any of the things that have happened in the last year and a half here with all these massive tax law changes attributable to COVID and the things that are coming down the pike with the American Families First Act that's working its way through Congress now. I mean, they're just massive changes to the Internal Revenue Code that's impossible to keep up with. And people need help. They need to reach out to some place that can give them reliable guidance, particularly when we're talking about tax compliance issues. There's a tax preparer on every corner, Bob, and that's fine. And most of these people know what they're doing as far as filling the forms out, and that's all well and good. But as far as tax compliance, when it comes to dealing with paying taxes that you owe and can't afford to pay, or you're dealing with wage levies or bank levies or tax liens or interest assessments or penalty assessments and all these things that go along with the after the fact enforcement, there's not a lot of people out there that can help you get through that stuff.
Well, you mentioned the child tax credits, and I want to start with that because there's just so much confusion with this one. I mean, let's clear that up. This is not free money or a stimulus check. It is an advance on something that they would have received when they filed their taxes. Now, did I get that right?
Well, yeah, you got it mostly right, Bob. It is free money in the sense that it's a refundable credit. And what I mean by that is let's say you're entitled to a $3,600 child tax credit, And when you file your tax return, you would have owed the IRS $5,000. All right, so you take the $5,000 that you would have owed them, you subtract the $3,600 child tax credit from that $5,000, and what you're left with is a tax bill of $1,400. So the tax credit is better than a tax deduction in that it reduces your tax liability dollar for dollar and not just at a percentage basis. But now let's say you file your tax return and you only owed the IRS $1,500 when you filed the return, and now you got that same $3,600 tax credit that you're entitled to. Well, now you're getting a refund, Bob, of $2,100, even though you didn't pay in $2,100. All right, that credit gives you a refund. So that's what I mean by a refundable credit. If your tax liability drops below zero, you get money back from the government. It's like the earned income tax credit. That earned income tax credit works the same way. And so what Congress has done here with the Consolidated Appropriations Act that was passed last December is they changed that child tax credit into a refundable credit, increased the dollar amount of the credit, and then made it apply to children older than what the old rules had it capped at 16 years of age. Now it's capped at 17 years of age, and so it's been expanded in those three significant ways. And to top that all off, the Congress has mandated that the child tax credit be paid out incrementally in the form of cash as if it were a stimulus payment to taxpayers that qualify. And so they get a monthly check starting in July, although the IRS is having tech problems to get that stuff done. But that's the purported intention is to get that stuff paid out on a monthly basis starting in July. And the way that works is, let's say you're entitled to a total credit of $7,200. Well, what happens is half of that credit is paid out on a monthly basis in the form of these quote-unquote advance payment checks. The other half of the credit then is claimed on your tax return when you file that return in April of next year. So that's how the child tax credit works. It becomes, Bob, in every sense of the word, it is a welfare program that's administered by the Internal Revenue Service. That's how it works.
Well, let's talk a little bit about Washington's assault on the wealthy. What are some of the things that we do know pretty confident that are going to be coming out of Washington tax-wise, and maybe in regards to the tax brackets, corporate taxes, capital gains? What do you know that you could look at and go, this is probably for sure going to happen?
Well, yeah, there's it's never for sure until it's done. You know that, Bob.
Sure.
And so as this stuff continues to work its way through, there's all kinds of changes and things that are happening here, and so it's it's never a deal until it's a deal. But in fairness to your question, there's no doubt that the corporate tax bracket is going back up. All right, right now it's at 20%. It's probably going to go to 25, maybe higher, maybe 28%. Likely not going to go to the 35% that it was before the Tax Cuts and Jobs Act, the Trump tax plan that reduced it from 35 to 20. It's probably not going back to 35%. The other thing that's going to happen is the individual tax brackets are going to be adjusted upward. Most definitely, the top tax bracket is going back up from 30. I think the top bracket right now is 30. 36% is going back to 37.5. It might be 37 going back to 39.5. I can't even keep this straight, Bob, unless I'm looking at the charts. But there's no question that the top tax bracket is going back up. There are also things that are fairly certain. This child tax credit, for example, that we were just talking about, is temporary under the Consolidated Appropriations Act. It's probably most likely going to be made permanent. So this is something that is going to be fixed in law going forward, where the government is just going to be administering this welfare on an ongoing basis. And I think what this is, quite frankly, Bob, getting back to the child tax credit, I think this is the precursor to universal basic income, where the federal government puts itself in the business of giving every citizen free money every single month in and month out, as long as they're alive and drawing a breath. I mean, it is just most definitely a universal basic income welfare program.
Let's talk a little bit about capital gains treatment. It seems like that the the average investor is not going to get hit by this. It's going to be somebody who's making about $400,000 or more. Talk a little bit about the reality of that capital gains treatment.
Well, first of all, I don't think the 400,000 is a real number. I mean, that's the thing that the Biden administration has been saying over and over and over again, is that none of these law changes are going to affect anybody making less than $400,000 a year, and that just we're talking about the tax increases now, and that's just simply not true. I mean, just for example, there's another thing that's on the table is it's on the chopping block, is what I should say, is the deduction for qualified business income. Now, under the Trump tax plan, what happened is they put into law a deduction of 20% of net business income for every small business owner out there, whether for sole proprietorships and Schedule C business owners. All right, and the qualified business income deduction of 20% was intended to put small businesses. Let me rephrase that and say unincorporated small businesses onto the same footing in terms of tax cuts as was enjoyed by corporations. Remember, their rate went from 35 down to 20. So the qualified business income deduction was granted to unincorporated small businesses earning with married filing jointly income less than $415,000 a year. Got this qualified business income deduction of 20%. Now, Bob, this deduction was an across the board thing, and furthermore, you didn't have to spend money to get the deduction. Now, normally to enjoy a deduction, you got to spend money. So you want to write off your business equipment? Okay, fine. You got to go buy business equipment, right?
Sure.
You want to write off your business travel? That's great. You got to spend money traveling for business, and then you get the deduction. But the qualified business income deduction was 20% of net business income. So it was on top of all other deductions. And that was a huge deduction that was incredibly beneficial for every small business owner out there in reducing their tax liabilities considerably. And there's just no doubt about it. That's going to go away. They want to eliminate that. And then this idea that the Trump tax plan was nothing but tax cuts for the rich is just absolutely demonstrably false, Bob, because of, if for no other reason, this qualified business income deduction that was put into the law that the Biden administration has sworn they're going to chop out. And so, that's another thing that I expect to go. So the idea that's only going to affect people earning $400,000 a year is just simply not true. Now, here's another reason why that's true, and you talked about capital gains in particular. All right, so this is a serious proposal by the Biden administration, and they're pushing hard for it. And it probably, you can never say for sure, of course, with these things, but it very likely will end up in the law, and that is the elimination of what's called stepped-up basis on inherited property. Now, I'll tell you, Bob, that's going to pound every mom and pop property owner out there in America. Now, here's what I'm talking about. If let's say your parents buy a piece of property for $50,000, and they live in that home for 60 years, which is not uncommon for our senior citizens, right?
Right.
My dad just passed away, Bob, at 93 years old. He was living in his house since 1969. All right, that's how long he was in that house. So, and that is very common, very typical for people of that age. So let's say you've got this house you bought for $50,000 in 1970, and now here we are in 2001. What is the house worth? It could be worth millions. I just was dealing with a client here the other day whose parents bought a house for about $30,000 in the early 1970s, and it was in the Philadelphia area. That house just sold for $2.2 million. All right, mom and dad passed away. The kids inherited the house. I think there's 6 kids that sold off the property. $2.2 million. So this is not unusual, particularly if you live in California. Imagine what the inflation increases have done with real estate in the state of California. It's mind-boggling, right? So what happens under current law is if you inherit property with the fair market value of the property as of date of death. So in the case of my clients in Philadelphia, their fair market value of the property is $2.2 million, right? That was the value as of the date of death. Now, when they sell the property for $2.2 million, they have no capital gain because their basis is the same as the fair market value on date of death. What the Biden administration wants to do is eliminate that rule. It's been in the law for as long as there's been dirt, Bob. That rule has been in the law, and they're referring to it as a quote-unquote loophole for the rich. All right, so what that means is that my middle-class clients, if that becomes law, and let's just fast forward and say that this happens a year from now. Well, now we know that the parents had a basis in the property of $30,000. Now it's worth $2.2 million. So now my clients have a capital gain on the property equal to 1.9. Well, no. 1,170,000 is the capital gain they have on that property. And they got to pay capital gains tax on that, Bob, at 23%.
So
and these are, go ahead.
I should say, when do these tax laws look like they're going to be passed, starting or go into effect? Well,
and again, that depends on how the law is written. The way the draft is right now is this rule would go into effect in 2022.
Okay.
But you don't know. I mean, some of this stuff they make apply retroactively. So They may pass the law and say it applies to anything that happened, January 1st of 2021 going forward.
Well, I tell you what, a lot is changing, and I'm glad that you're keeping an eye on it and bringing it to the radio program because it's a lot of really important information for people to know. Once again, Dan's website is taxhelponline.com, and there's a ton of resources on that website for you to go check out. Dan, until next month, I really appreciate you coming on the program.
My pleasure, Bob. Thanks for having me.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. I kid you not, it is a challenge when you have as much written resources as Dan has. Because I know we have quite a bit on prudentmoney.com, but nothing like what Dan has. And to be able to organize that in such a manner that the reader or the user of the resources does not become frustrated trying to get the question answered, trying to locate. It's a real challenge. And I think he's done a great job of really reorganizing that website and presenting resources in such a way that you can learn from it. And as Dan pointed out, it's all free. It's a lot of information that is just go click through and you can read it and gain information about what you're dealing with. And that's something with all of his resources I want to stress is that it's basically step 1, step 2, step 3. It's easy to understand. I've had the blessing of knowing Dan for about 20 years now and been doing radio with him and seminars and webinars, and what a great wealth of information he is. TaxHelpOnline.com. Hey, this is Bob Brooks. If you got a question for me, please go to the website at prudentmoney.com and send it in because we are all out of time. Until we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.